Hello and good morning, friends. How are you all doing? Hope everyone is doing great. Hope you had a lovely weekend and wish you all the best and success and great luck in this auspicious Navratri week. So today we are going to start something new and we are going to make little changes. So the changes, instead of giving you daily updates in the morning, what we are going to do, we are going to do a weekly exclusive mastermind session in which I will talk about what has happened in the market in the last week, what exactly you should be expecting from the markets in coming week onwards, because the objective of trading and investment, my personal objective to teach you all, is keep it simple. When you start trading, you could not be doing research. Research is done pre and post market hours. During market hours, you have number, you have figures, you have prices, you have levels that you trade, buy or sell, because in trading you can either be buying or be selling. So having said that, let's jump into the data. Let's discuss what exactly had happened and what we should be expecting from here onwards, how markets are going to play. Remember, I had been reminding you, this is the October month. October of a leap year are always special. 28th of October, we have a special date in the history of stock market. The crash of 2008, 1929, 94, everything came on 28th of October. 31st of October, that's the last trading session of this month, is a new moon as well. So that also makes it special. Then again, we have only one good election, the US election, that impacts the entire global economy. Then after that, we just had a massive crash in stock market, and we are on a great rally. Look at the IT indices. From 11,000 levels, they touched 22,000 levels, like doubled. Pharma doubled, many auto stocks doubled within a span of few months. So there are many things happening and shaping up. Many indices doubled from the bottom, stocks doubled and tripled from the bottom. We just got a hit by one of the steepest crashes of stock market history. So this is going to be very special. And if you are present in the market, trust me, you can have hell of an opportunity in coming few months, in coming few years. You should be invested, but again, taking right decision is very important. Because see, people who couldn't make money, they could neither make money when markets came up, they could neither make money when markets were down. So because they don't have clarity on what to do or what not to do, but you do have that clarity. So let's start this mastermind session looking at the numbers and the prices. Let me share my screen with you. Well, starting with the fund flow, one thing to notice is fund flow is not very impressive. Almost 480 crores sold by foreign institutions. Domestic sold about 430 crores. Indices were even sold about 42 crores. Index options were purchased about 672 crores by FII. Stock futures were bought about 139 crores, and 53 crores of stock options were purchased. Volatility was down by 1.9%. So the fund figure doesn't give you much cue, but again, it's negative, not positive for sure. But the quantum of selling by both foreign and domestic institutions have decreased for sure. Looking at the indices, it was an overall green market on Friday. It was Nifty up by 2.7%. Banking's up by 2%, metals up by 4%, reality almost 3%, private banks 2%, financial services, pharma both up by 1.5%. Then we have infrastructure up over 1%, energy positive, PSU banks positive, auto positive, FMCGs positive. IT and media were the only loser of yesterday's trading session. So rest all day, it was a green market altogether. So this is how exactly, what exactly we had on Friday. Now let's take a look on what you should be expecting from the markets. Let me take you to the charts where we will discuss what exactly to look at. So let's start with Nifty. So first of all, let us see the plain price action, no indicators, nothing. just the price action, because remember, the 90% magic is in the price. What are the candlesticks that we look at? They are the prices. What are the candlesticks show? A simple candlestick means simply, a red candle means opening at the top, closing at the bottom. Green means opening at the bottom, closing at the top. So basically, all the market participants agreed that market should open at this price, and they were able to buy and sell. All the buying and selling activities agreed to close a specific price. So a candlestick gives you an insight of all the market participants' psychology, their thought process, their vision, what exactly they're expecting from the market. That is the reason why the patterns evolving on candlesticks are the first thing to be looked at. Once you look at them, then you try to support your theory with the method of some indicators, some volume, some other parameters. But yes, price is the key. Price is something to look at. So having said that, let's review Nifty. So it's been a big down rally from 12,500 levels, or rather 400 levels, and then we corrected till 7,500. Now we have a big uptrend. Now we have already taken off 12,000, and post 12, right here we are seeing two big, bear attacks. See, you need to understand, we are into complete uptrend. Then the first bear attack happened on this territory. That's a big red candle made on 31st of August. Then we corrected till 10,800. Then we had a good bull rally till 11,800 to 12,000. That's a 1,200 points rally again. Then we have this big red candle. Now, what exactly are we supposed to get from it? Now, just study the last bull rally. It started on it started basically on 25th of September, when markets opened the gap up post closing around 10,800. Then it rallied till 12,000 levels. To be more precise, it was 12,030 or 5030, I guess. Then if you look at these 3 to 4 candles, this entire area before the big red candle, this first one is a doji candle. Then we have a small bullish candle. Then we have a big spinning top. Then we have a doji. Then one again spinning top, or a hanging man, you can say. Then we have a bearish engulfing chart pattern. Now, what is a bearish engulfing chart pattern? Bearish engulfing, it's a reversal pattern. Now, understand the market psychology. Bulls were leading the rally. Then indecisiveness came in the bulls. So basically, the bulls who were here, they went into a protective mode of protecting their profits, booking some profits, and the bears attacked. The bear attack was getting significant. So either the bull strength was losing or the bear strength was gaining. That is the reason why indecisiveness. Now, indecisiveness in an uptrend is in itself bearish. Having a big engulfing candle, engulfing bearish sessions makes it more potent. So one thing is for sure, we have got an uptrend reversal. So it's a bearish reversal. Now, any chart pattern needs a confirmation. So if you look at the candle right beside this bearish engulfing pattern, it did not close below it. So far, we haven't received any confirmation. So one thing very important, 10,650 is a kind of make or break level. In case Nifty closes below 10,650, we are headed for a big, next round of correction. Now, if you just observe last 2 candles on this daily chart, it's a big bearish candle, then a small body candle inside the body. So it is also called inside body pattern or bullish harami chart pattern. Now, we call it bullish harami chart pattern. Understand its theory inside it. The candlesticks are Japanese. So bullish harami means the term harami has been given to a pregnant woman, in which this big candle is the woman candle, mother candle, and the small candle inside the body is actually the womb. So this basically signifies that something is building up. Something is there inside the market that is not yet, available to us. We're not aware of it. So in case you see this similar pattern in a big downtrend, that is a bullish reversal. But this bullish reversal in an uptrend doesn't make much sense. But again, it is a pattern, so you should pay respect to it. Your trading range should be selling below 11,650, and this big red candle. It's a bearish belt pattern. Unless and until this bearish belt is taken off, no long. So no buying unless and until we are closing above this bearish candle. That's 12,050 levels. And let me just check it, exact level. This camera is coming in between. Okay. So buying should be 12,025, 30 levels above it and 10,650. So your trading range on Nifty should be anything between 11,650 till 12,000. Above 12,000, you would be headed for a big bull rally because it is a big bearish reversal that's getting taken off. So above 12,030 buy, 11,650 below sell. Now, one price important here is, if you see this small gap here, this is a gap that started on 11,800 till 11,750 levels. And this is also the high of this previous big bearish day. So you can say that in case Nifty moves above 11,800, we can see some rally, some movement, some positivity till 12,000 levels. We could be testing again 12,000 levels. And in case you see any positivity above 10,800, you can buy with stop loss 650 for target 12,000 levels. Till then, avoid buy. So that's about Nifty on daily chart. Let's see how it looks on weekly chart. Well, weekly chart, it's a dark cloud pattern, a big bullish candle with a cloud. This is also a bearish reversal on weekly chart, but again, this is a weak bearish reversal because this cloud is not penetrating over 50%. Had it been a case that Nifty closed below 11,700, it would have been extremely potent, extremely potent. If you look at this big bearish candle, it actually covered the entire previous bullish candle. So that makes it a bearish engulfing pattern that made a big blows. But this is a cloud pattern, not so strong. Now let's look at the volumes. How has it been? Well, Nifty trading well above 20 and 50 days moving average, took resistance on the upper band of Bollinger Band, and then we have a big bearish day, small body candle. Volumes were thinner on the positive day, that's Friday, but volumes were high on the bearish day. Though it was not as high as we have seen on 31st of August when actually market reversed and it even touched the 20 days moving average. Right now we are trading way above 20 days moving average, but the volumes were thinner when markets went positive. If you see RSI, it's bullish on daily charts. So, but again, it has a down slope now. So it is a possibility that we could be facing resistance and we could be headed off for a cool off in the markets. So that's about Nifty. Now let's take a look on Banknifty. So first of all, Banknifty, this is the weekly chart of Banknifty, 2 weeks of rally. Then we have got a spinning top, kind of cloud pattern, but won't call it a cloud pattern. So this is the cloud pattern on weekly charts of Banknifty on 31st of August, a gap up opening, then covering the big bullish day over 60%. This is an ideal cloud pattern. It would have been a similar pattern had it been a case where Banknifty closes around the lows around 23,000. But instead of doing that, Banknifty actually closed 23,523. So that's pretty interesting. It's a spinning top. It's a kind of indecisive market as of now on weekly charts. Let us see what do we have on daily charts. Daily charts, well, daily charts also look good. It's the same thing, a bearish candle. But again, the in the body candle on Friday, it's following a trend line. So on Monday, you could be waiting, you could be looking at support around 23,400. So let me show you one more thing on Banknifty, something very special, because that's what is going to give you a trading clue. See, this is the chart of Banknifty. If you see this kind of blue line at the top, this is actually 200 days moving average. For the first time when Banknifty touched 200 days moving average on 31st of August, we got a rejection on 200 days moving average. It made a cloud pattern. Then further it went into a correction of over 5,000 points. Then we have this big uptrend rally. And now what we have done is we have tried to break this 200 days moving average 1, 2, 3, 4, 5, 6 times, 6 times in a row failed always. Twice Bank Nifty got closing above 200 days moving average, but never sustained. Looks like 200 days moving average is a big resistance as of now. However, one thing very special, in case you get a closing, or sorry, opening on Monday above 23,600 and market sustains as well, then just remember, Bank Nifty for the first time would be opening and sustaining above 200 days moving average, and that can bring in a massive upside rally. Not massive, at least some upside rally. So on Bank Nifty, what you should be rather doing is, see, on Bank Nifty, you need to keep a trading range of 22,950, 23,000, then 23,600, then 24,000. So 23,600, that's the 200 days moving average, is going to be your first resistance. In case that's broken, look at the price targets of 24,000 to 24,200. That would be your first target, and you could be bullish above 23,600 levels. And in case 24,000 is broken, you could be headed towards 25,000 level. But you do not need to forget that we have a bearish engulfing pattern as well. So you have two things playing up. One, a big bearish symptom, that's a bearish engulfing, and one big bullish symptom, in case Bank Nifty sustains above 23,600. So my personal recommendation, wait. In case Bank Nifty sustains above 23,600, we can be buyers. In case Bank Nifty opens below 23,600, we can sell with stop loss 23,600 only. So remember, keep your trades in a way that Bank Nifty is bearish below 23,000 and bullish above 23, and bullish above 23,600. So 23,000 till 23,600, this 600 point range is a no trade zone. So no long, no short between 23,600 to 23,000. Below 23,000, you could short sell. Above 23,600, you can long, keeping a view on a resistance of 24,000. Above that, sky is the limit. So that will be all on Bank Nifty. Let's take a look on Bank Nifty's weekly chart as well. What do we have on it? We have already seen that. So that's about Nifty and Bank Nifty. Hope you got clear pictures. Remember some price ranges. Now let me show you what could be our targets in case you see Bank Nifty correcting, and what all we could be looking at. Forget that. Let's move on to the stock of, sector of the week. So I'm going to share sector of the week, metals. Yes. In case you want to trade, metals should be what you need to be looking at this week. Metals are very special this week. Let me show you why. Let's start with Jswsteel. Just look at the charts of metals, all the charts. See this, a big reversal, closing way at the top, good volumes, everything perfectly fine, all the levels broken. Looks like going to test its highs around 400 plus levels, currently trading at 310. So Jswsteel is what you need to be buying this week, and your stop loss should be 257. Unless and until it goes below 257, just keep on adding on dips. Tata Steel. Let me show you all metals so that you understand why am I so bullish on metals. So look at this Tata Steel, a nice upside rally, a good downtrend at the end of the fall. So this is what we call a bullish harami chart pattern. Big red candle at the end, and then we have a bullish candle. So when a big red candle with a small in the body pattern, that bullish harami chart pattern, comes at the end of a downtrend, it's significant. But similar pattern appearing at the top of the range like it happened in Nifty and Bank Nifty, it's not that significant. So Tata Steel, you can buy above 395. Your targets would be, first of all, 440, followed by 480 to 500 range. Your stop loss is 361, but again, that's weekly chart. Let's look at daily chart. What do we have on daily chart? So this is the daily chart. Your stop loss as per daily chart would be 375. Just buy Tata Steel. Let's look at Hindalco. See, this is again a beautiful chart. Hindalco, nice uptrend, a good correction, a reversal, bullish reversal chart pattern at the bottom. If we combine these 4 or 5 trading sessions, it becomes a morning star chart pattern. Then we have an uptrend. So in case Hindalco goes above 180 levels, we could be headed towards 184, followed by 192, then again 200 plus. Now, the point why metals are going to be the sector of the week, simple reason, the entire sector looks bullish. All these stocks look bullish. So whenever this thing happens, it's a kind of overall sectorial move. So next week can be a metallic week, remember. Now, let me quickly show you some more stocks. Okay, for short selling, keep an eye on Nifty IT. Yes, let me show you why you need to be looking at Nifty IT and why short selling. Well, Nifty IT, let me share a word of caution. I'm not saying you start short selling Nifty IT right tomorrow onwards. Rather, you should wait for a confirmation on being stock specific view. I'm showing you the index level. See, look at this index. In the month of March, we were around 1100. 2250, 7 months, the index doubled, your money doubled. After this massive rally, we have got a small body candle at the top, then a small bearish engulfing, then a big bearish engulfing, followed by a spinning top, high level of indecisiveness. It looks like the entire IT index is headed for a bearish reversal. For that, what you need to have? One more negative closing below 21,000. This window is what may play important role. So in case you see Nifty IT index closing below 21,000 levels, it would be a bearish view altogether on the index. Now let me show you the stocks of Nifty IT so that you can plan your short sells in case the reversal is confirmed. So far, reversal has not confirmed. A perfect short. Well, HCL Tech, uptrend, small body, cloud pattern, the cloud pattern confirmation, then bearish continuation, sell on rise, keep your stop loss 860. What else? Tech Mahindra. Avoid avoid TCS and Infosys, because Infosys had a positive quarter, good quarterly numbers. So basically, lots of people, retail traders especially, would be looking at it, and it's a fundamentally positive as well. Now, this is Tech Mahindra. It's an uptrend. It also fell confirmed, but again, this is a kind of counter attack line, a piercing line, in the neck piercing line. So you can be selling Tech Mahindra in case it goes below 812. That's the reason why I said, word of caution, ITs are not short right now. You need to wait for a confirmation. What else? Let me share our views on all other indices. Let's start with Nifty Auto. So auto, look at this, what's happening in the auto. Nifty Auto taking support at 20 and 50 days moving average combined. RSI looks coming down, but 64, so still bullish. But one thing very important, if you see the highs, this is a kind of 3 mountain high, or you can say triple top. It's a triple top bear pattern that it has formed. So in case you see index going below 79.25 levels, you can short sell all the auto stocks, no problem. But again, you need to wait for a closing below 7,900. Till then, you can buy with stop loss of the same, because it's at support. So at support, you don't sell. You sell once support is broken. You buy support so that in case the support is confirmed, you can be making some good opportunities. Let's look at Nifty Energy. Energy again, it's pretty impressive, though it's into bear trend. But what has happened is, after a good downtrend, we have a last big bearish candle. Now, big bearish candle at the end of the trend is normally an exhaustion candle, means the bearish movement is exhausting. Now, at the end of the bearish trend, you have a spinning top, inside body pattern. So this is what we call a bullish reversal chart pattern. So what you need to do is you need to wait and watch for the index on Monday to close above minimum 60% of this bearish candle. So that would be 14,617. So basically you can keep somewhere around 14,700 levels in case you see IT index, Nifty energy index closing above 14,700 levels. We can find some buying opportunities Tuesday onwards. What about pharma? Let's take a look at pharma. Let's take a look on metal index as well. As I said, 20 days moving average support, reaching 50 days moving average, good, strong, no problem. Pharma is a buy. Sorry, metals are a buy. Nifty pharma. Well, pharma looks little bit consolidating. It has broken its 20 days moving average, taken support at 50 days moving average, and its RSI is taking resistance on 60. So it's in consolidation, no trade into pharma stocks. That would be all on index front, and I have already shared metal stocks with you. Let me share, let's study some more stocks for a better view. Let's study Axis Bank, some of the banking, good banking stocks. So looks into uptrend, but again, similarly, like as Bank Nifty, keep a watch on Bank Nifty, and accordingly, you can buy or sell depending upon what levels are broken. Axis Bank, it will be positive above 476. And unless and until sustains above 481, don't expect any big massive buys. Above 481, you could be headed towards target of 500 plus, and you can sell below, no short sell as of now on Axis Bank. Let's take a look on HDFC Bank. Because see, banking in any index, what you should be doing is you should be looking at the index leaders, industry leaders, because they are the one who decide the index movement. So again, HDFC Bank, just like Bank Nifty, bearish reversal, big bearish candle, then in the body candle pattern. And now this is interesting because this in the body pattern has closed above the 50-60% levels of the previous bearish candle. So what I'm expecting is, in case it sustains positive, we may see these 12-14 levels broken. So HDFC Bank, no buy, no sell unless 1214 is broken on the upside, or 1180 levels broken on the downside. So HDFC Bank, sell below 1180, buy above 1215. That should be your view on HDFC Bank. Now let me check few more stocks for you. Well, one thing very special I wanted to show, NTPC. It's a bearish, extremely bearish, but opportunities like evolving. Look at this, what I'm saying. See, NTPC is a multi-year low at present. After a good downtrend, look at this. We have a big exhaustion candle. Then we have a gravestone doji. So an indecisive candle in a bear trend is itself bullish. Then next day the stock didn't break the last 3 days low, and we have got a reversal. So technically these three candles makes a reversal pattern. All you need to do is wait for a closing above, I would say 81.5, and then you could be buying with stop loss of 78 or maybe 76. This particular big red candle's low is what would be your stop loss. It could be headed for a target of 84, 89, followed by, so these levels are the Fibonacci retracements. So the first retracement, you could be looking at 38% retracement, that's 89. Then second targets you could have, that's a 50% retracement of 92%. Then we have 96. So in case this reversal plays out, the stock may be headed towards 100 price levels. Yes, 80 to 100 means 25%. That's what I'm saying. That's why it becomes very, very special. One more special stock that I have brought a few, Voltas. Yes, festival season, Diwali, Dashera. In our country, this period is considered so special that we all love buying stuff. We all stop buying, things. Many a times when we have to buy some home appliances like television, refrigerator, washing machine, vehicles, and we have any festival season coming up, we wait and buy in the festival season. So usually the consumption, the FMCG sector would have good traction and sales during the festival season, and that's what reflecting on Voltas. Let me show you. So let me show you Voltas with volume, because that's even more interesting. So this is Voltas. Look at this volume. Many things positive on the stocks, many things. Let me start with some. Number one, it's trading into good uptrend channel, a good breakout above the Bollinger Band. That's special. See, it has gone above the Bollinger Band, a gap up window with big volumes, RSI going above 60. Trust me, in case this stop loss, this you can trade with this small stop loss of 20 days moving average 674, and making 100-200 rupees won't be a big task in case the trend continues. So that's why Voltas is special. Let me show you Voltas on this chart as well, where we see the price action even, with even more clarity. See this. This Voltas is trading into a nice channel. Let me draw a channel line. It's not drawing for some reason. So basically, this is the trend channel that this particular stock is following, upward sloping trend channel. It's a good bullish buy. Just go and buy, nothing else, not much. Now let's take a look at Reliance. What is our big boy doing? Looks bearish. Yeah, bearish. In case it goes below 2174, you can short with stop loss of, well, the stop loss a little deeper, so trade with options, I would suggest, because again, the kind of rally we have seen in Reliance from 880 levels till 2350, it's like a big multiple times return. So even a 20% or 38% retracement can be extremely deep, so deep it can wipe off your entire portfolio. So don't play with this stock with naked, at least in futures. So trade with options. And again, a good long-term buy, a good long-term stocks, no problem. So when you get into, what happens when you get a correction into a good stock? Just buy more, you're getting it cheaper. So, the corrections are good opportunities to accumulate stocks at good levels. So that would be all. I hope I shared lots of stocks with you, some trading ideas that includes steel, metal sector, banking. So you should be avoiding. It looks a little weak, but keep clear price levels on the index front. Buy banks in case index sustains above 23,600 or 24,000 levels. It would be a short below 23,000 levels. Till then it could be consolidating between 23 and 24. Nifty, again, it's short term, or you can say intraday positive above 11,800 and negative below 11,650. So above 11,600, 11,800, you can buy intraday for targets of 11,000, 12,000 rather. That could be your upside target. Above 12,000, sky is the limit. So rest next week onwards, in case you want, any one of you want to have your personal portfolio or stock discussed during the mastermind weekend session, I would love to do that for you. So hope to see you on the next weekend, and this is going to be very, very special. Now, if you will listen to this video once again, I have taught you some good candlestick chart patterns, bearish and bullish chart patterns, engulfing chart patterns, bearish and bullish harami chart patterns is what I have shown you. This will also help you in learning how to read the markets. I have also shown you the retracement level. So I'll keep on adding values. If you want any specific topic to be discussed or anything that can help you in your trading or plan your investments, I will love to take up that particular topic in the next weekend show. So that would be all for this week. Wish you all a great, great Navratri. I wish you all the best. Thank you so much for watching and listening. Don't forget to like, share, and subscribe. Abhishek Raj signing off. Stay healthy, stay wealthy.